quick overview of Friday's trade and how I did approach it, and how not marrying to your buys is really helpful. So over here, this is gold, and this is the 4-hour time frame. You can see I was expecting higher prices with this of this level going higher, but because of the NFP, I didn't really want to trade until the NFP has passed, right? So after the NFP, I wanted to engage after the NFP. You can see later on we saw this is the NFP candle, this candle with the upper wick. This is the candle that NFP was in, because it's from 5 to around 9. So 8:30 was within this candle, and you can see it had an impact. So before even this candle had printed out, or before the NFP, what we saw is price was bullish at this level, right? This line, which I did make the NFP video. You can go back and reference to it and see what I was talking about at that level. So that level is was a monthly high, right? This level is the previous month's high. That what you can see as of now, we have the sweep. Price has already swept it, and we displaced lower. So as of yesterday, before the market tanked lower, price was at around that level. You can see this is the monthly. Let me pull it over here, right there. So this is the monthly high that I've shown you guys. And price before the NFP, we're gonna go to the 15 minutes time frame and see how price was printing around that point in time. But since I had to wait, I was out, and I found myself that the market was not showing me any bullish signs. The market was showing a reversal with formation of bearish engulfing candle. After this candle closed, then I had another context area, which was this 4-hour IR, of which I wanted to see the market drop to this daily fair value gap. So if I can take you back to the daily fair value gap, what we had is we had that daily fair value gap. Remember, the market had already utilized this fair value area, which we're gonna be talking about it in the next part, the next video, whereby we're gonna be doing the next week's analysis. So, or I will do it once and then finish it off. So what I saw is, with this candle rejection, which was on Thursday, we had liquidities formed there, which was paired with this previous days this daily fair value gap. So we had liquidity with this daily fair value gap. That's what I was intending to target first. And so I had my context area after seeing the 4-hour form the bearish engulfing candle, not closing above that previous month's high. Because if I was to be bullish, then what I wanted to see is a closure above that high, then maybe a retracement to this fair value gap. We have a fair value gap here from the lower time frames, which we're gonna talk about, then a continuation going lower. But since also that fair value gap didn't even actually form, or it failed, I saw this bearish engulfing candle having another context area, also the market forming a bearish structure shift, because this candle closed below this rejection block, or to me these up close candles were an order block, a bearish order block. And since we have this daily fair value gap, as well as these liquidities are resting below there also as a major liquidity pool, I had to change my bias. So of the 4-hour, that's where I had my context. This is the 4-hour IR. What did I see at that moment in time? This was the time during the 8:30 news. Price before 8:30 was at around this moment, the previous month's high, whereby I wanted to see candles closing above it. And if we go to 15, the 15 at that moment, price was nicely printing. We're forming fair value gaps, so I wanted to see these fair value gaps hold and create other fair value gaps above that level. If I was to see that, then I would have entered a buy, and I guess this was to be my target, which is the previous day's high. But since that failed, we can see, if we go to the 1-hour, market displaced lower. Market was displacing lower. We were forming market structure shift because the 8 a.m. candle closed below this rejection block, also creating bullish order blocks. You can see the strength of this candle dropping lower, and also of the 1 hour time frame. At that moment in time, we pushed higher, created that 1 hour fair value gap, which was a key concern for me. Were we likely to tap into this 1 hour fair value gap and then drop lower? So I was monitoring how this candle was printing, the candle that I entered a position in. What happened is we rallied higher, tapped into that order block, and then we started rejecting lower and we closed bearish. As the market was pushing below this low, that's when I was trying to look for a position then to target this daily fair value gap. You can see the market tapped into that, and if I had maybe held, but don't really want to have much, maybe could have given a good 1 to 4 hour, but I usually do 1 to 2, which is ideal to me. Quick ins and out, then maybe reduce more pressure. Then yeah, so the main concern was I was to be bullish of this level going higher. You can see I want the NFP to push lower, then continue higher. First of all, I was expecting a fair value gap around this moment in time. This fair value gap didn't form, right? So it was the first sign that indeed this bullish bias that I had at first was becoming invalid, because we didn't really have fair value gaps being formed, and now was invalidated when this candle closed below these, and also a fair value gap, possible fair value gaps being formed. So on seeing this candle rejecting lower, I needed to drop onto the lower time frames, and off the lower time frames you can see we had nice rejection, push higher, formed a fair value gap, rejected lower. Wanted to see would really, because immediately the 8:30 a.m. candle closed, we had already confirmed this 4 hour IR, which is a higher time frame context area. So with the next candle, which was the 9 a.m., we pushed higher, that created the fair value gap, and then the next one I wanted to see how price was react towards this low, then engage in price. And you can see those fair value gap were left open, the 1 hour and the 30 minutes, because price had already tapped into that context area and also utilized the order block as a reversal point. So having marked up this low, which I was watching, if we go to the 15 minutes time frame, you can see a note there. So I was to look for sales of these low. What happened is, as the market was trading with this first candle, I managed to get a displacement, which I had already dropped to the 15 minutes time frame. Got that displacement, entered there, the market rejected back, then the next candle, and the next candle pulled back, and my TP was met. So I think with this position I should have maybe scaled in, because these immediately seeing the market displace through this low, which was not really ideal. Maybe the first entry was a kind of rush, because this candle, you can see, didn't really close below that. I had entered at that moment after seeing this candle maybe close, confirming that fair value gap. Then the market pulled back, didn't really tap into this 5 minutes fair value gap, then we started displacing. So immediately I could have seen this displacement, then I should have maybe added into another position to have, because the first trade should be, maybe I should have reduced that maybe to this candle's high, or the high that had been created. So reducing my risk and also adding another trade, maybe have the full risk only for the second trade, right? If I could have maybe trailed my stops to break even for the first trade. So then you can see how the market tanked, and full TP was hit at the key level, but the market just continued lower and lower, but it is what it is. So as of Friday, if we check on how the power of three actually played out, we had a nice power of three. The market had accumulated during the Asia. Then during the London session, we swept the Asia lows. Market pulled during, maybe before the New York session, the market pulled higher above the opening price. We swept all the Asia liquidities, as well as these previous as New York session highs. We swept, and then the market started tanking lower, creating fair value gaps that were being respected and others are not really tapped into. And Friday had a nice power of 3, and we took advantage of it. Right now, to clear everything off, on Friday we also on Thursday we also had this buy position, but I told you guys wasn't really the buy alert wasn't triggered, but the market just pushed higher to what I was targeting. You can go to the previous video and you can find that trade. Now want us to have a quick analysis on what we can expect this week. Let's start afresh. So these trades, I just want to maintain them. Let's clear everything. Let's clear. We all right. Every drawing, we have a clean chart. So we'll start from possibly the monthly time frame. What do we have there? This is the 3 months time frame. What we are currently seeing is prices sweeping that 3-month high, which also happens with the monthly high, and we have uh, 25 days before this candle closes. And from the monthly time frame, what you can see is the previous month's low has is paired with this monthly fair value gap, which to me can be a breakaway gap. I don't know. So we have that fair value gap, which somehow to me can be a monthly breakaway gap. BRKFG. And why is it a breakaway gap? Why is it a possible breakaway gap? Because the third candle is an expansive candle closing above the second candle's high, and if we have an expansive candle like that, it means that from the lower time frames what we have are fair value gaps, bullish fair value gaps that are being respected, right? But it's not always that breakaway gaps are not really traded into. It's maybe you can say 70% of the time they're not traded into, but some other times they are traded into. So a good example is this breakaway gap. This candle expanded with above this high, but the next month you can see price traded into this fair value gap, of which we pushed higher. So we need now to identify, is it likely that we might see price pushing into that, or we might push higher before trading into it. And so we need to identify a level of which we're gonna be identifying how price reacts to it. And so to me, I'll identify this monthly IR, immediate rebalance, which is all right, which is to me the monthly IR, which is a key level for me to observe whether price will indeed sting into that monthly fair value gap, or we might sting into that IR and then continue higher. A good example for that situation, if I tend to look for one, a good example, no fair value gap below here, but what you can see is the market pushed higher after immediately overlapping with this candle's high. So we might also see a thing like that, whereby the market overlaps with that IR and then we continue higher. So we need to watch how price will react to this. Then from this level we can determine whether we are bullish towards those highs or we are bearish towards this monthly breaker block. And before then, I think we should be maybe we trade daily. We try to look for positions daily. We can't really wait for market to reach this level then we start looking for trades. We want to refine further to see, is it likely price will be pushing towards IR, or is it likely that we might reverse from another PDRA going higher without stinging into this level that we've talked about. So this is the weekly time frame, and if I can take you back to the monthly time frame, we have this major liquidity pool that has been swept. So we have this major liquidity pool that has already been swept, which needs to be marked up there, so which is the previous month's high, with these liquidity, these right should be at the top. Nice one. So we have the previous month's high, a major liquidity pool that has been swept, and we need to have that event onto the lower time frames. So all right, so that's the PMH. I don't understand why, because this candle closed at this moment, but from the monthly time frame, that's what we are seeing. So from the weekly, we also swept the previous week's high, labeled there, then we displaced lower, then confirm a bearish engulfing candle. But also what you can see is we have this weekly fair value gap overlapped with that monthly IR, which is still left open, hasn't really been rebalanced. So we have this weekly FEG that could attract market going lower. Now we can find what could attract the market going lower towards that IR. Then we can monitor around this area. Could price react going higher off this level towards those highs, or could price disrespect these PDRAs and then drop towards this monthly breakaway gap? So since we have that a fair value gap, and also I usually love to use IR, right? So we had these weekly, all right, we had the weekly IR that has already been utilized, which I was really watching. I have it to use purple to weekly IR. Whenever you see an IR to me which is purple in color, it means that it has already been utilized. Now it has no meaning, but I can use it to identify whether we can continue going lower it, or maybe if we disrespect it, if we are expecting lower prices and maybe we close above it, then we can expect a continuation going higher. Because if indeed we were to be bullish, wanted to see a market sting into it and continue higher, displacing higher. But if it's being disrespected like it is happening right now by a candle closing below it, it's a first sign that indeed the market is currently not really looking good going higher. We might expect a drop going lower. And the first targets that we can target are all these liquidities over here. So we have the previous week's low as well as this low. All right, so that major liquidity pool, the previous week's low, is what I will be trying to target maybe on Monday. Should be at the bottom, and this should be black to me. Right, so I will try to clone these. All right, these this is the next low that we could target. So we have the before the market rallies into these lows, we have the major liquidity pools that we can target first, and then the market continue lower. Now we want to identify at these levels what is happening off the lower time frame and try to have a more read on it. So making things clean, this previous week's low also happens to be the previous day's low right there. And currently price is not respecting this. At first we respected it with this rejection, but on Friday the market turned lower, disrespecting it by closing below, also by closing below this candle's low, the daily immediate rebalance. So what I'll do is around this area, the daily context area, if we are indeed bearish, I want to see maybe the market push back into this immediate rebalance. Now I can get rid of this, since we have another IR that has been formed around this area, which is now my new context area. Now hasn't really been utilized, and therefore I need to change it to pink. So that will be my context area. If the market opens, rallies up, I want to be watching for reactions of these weekly IR. And since this is a daily fair value area and the market has disrespected it by going deep into the fair value area, then we can anticipate to see the lows of the fair value areas to be taken, right? And also, since we have this weekly fair value gap in close proximity and also the higher time frame context area, we can expect next week maybe to continue lower to sting into this area of the possible context area, which is that weekly daily IR. It's no longer weekly. I'm noticing we are already in the daily time frame. So daily IR right there. So want to identify now, are we expecting maybe price to pull back towards this level and then drop lower? We need to identify of the 4-hour time frame what we have there. So what you're seeing is we have this 4-hour fair value gap right there. So 4-hour FVG. So I will be expecting, because it's also another 4-hour IR. This daily IR is also a 4-hour fair value area, because we are seeing a drop, push back higher to the OTE levels, then a drop below that confirmed a market structure shift. So to me, around this area, I will be expecting maybe price to pull back, then a continuation going lower, which I will be watching of Monday. So Monday, there's a likelihood that price dips towards our targets. Then later on we can monitor whether indeed how price would react to this level. That will determine to us whether we should be expecting price to drop further towards these monthly breakaway gap. Remember, if this fair value gap fails and this IR fail, then the next target will be these lows, then these monthly breakaway gap. But if they are being respected, then we can expect continuations going higher. For now, I'm really bearish with my first target, the previous week's low, and then this fair value area low, then the weekly fair value gap, of which we will try to see how price will react to those levels. Now going back to DXY, and as usual we start from the higher time frame. Let's get rid of everything. All right, so what are we seeing from the monthly time frame is 3 months time frame, and the market has been consolidating. We are not seeing higher prices or lower prices. This candle expanded higher last year October. Then what we saw is as of this January, the 3 months high was swept. Then we had a drop, and if we were indeed bearish, what we would have wanted to see is a respect of this IR, and then also maybe a respect of these order blocks that has been formed for continuation going higher. But now what is happening, the market is kind of disrespecting that, and if you're disrespecting, then we might expect a continuation maybe going lower. So I'll mark up the already utilized IR, and If it has already been utilized, I use purple. So there is the 3 month, 3 month IR that is currently being disrespected, and also monitoring on these major liquidity pools is we have this 3 months low that has been swept. So we have 3 month low that has been swept, and of that, we, because price might sweep that and we continue higher, so need to be very careful. So we're gonna monitor how price has reacted towards this level, and also how price is currently reacting to this level. If you are indeed displacing below that with fair value gaps, then we can expect these lows to be taken, then finally these lows to be taken, or first of all the rejection block to be taken. So we need to draw back to the monthly time frame, and from the monthly time frame we have uh, 25 days before this candle closes. And if I try to align my things, all right, so we have the 3 months low there, whereby currently this candle, or where this wick closed, we closed below that. And if we observe, the overall structure is we have been consolidating a lot at this moment in time. Market pulled back, swept these liquidities, rallied higher, we have swept all those liquidities, pulled back, we are disrespecting these bullish fair value gaps, and somehow we're gonna be forming bearish fair value gaps. And also we have this fair value area, and whenever fair value area is being disrespected, we can expect to see the fair value area low being taken. So what I'll ensure I have there is this fair value area low. So FVA low liquidities, so that will be attracting the market if first of all we close displacement below this level. We also need to ensure that this level that I was watching, the monthly price closed below that, and we also monitor from the weekly how did price react to this level, and we can use the same to this area. If price is reacting off this level with displacement, then somehow we can expect this to be a breakaway gap that will be later on maybe traded after the final target has met. But to determine all that, we need to identify how price is reacting to that level. So having this level, having this target, we need more refination or more refining, because before the market reaches this low, assuming this will be, indeed the market will be bearish, before the market reaches that low, we'll need to go through this previous week's low. So before the market reaches my final target, we have the first target, which will be the previous week's low, that is there to be targeted first. Then see how price reacts off that, and then towards this low. So around this monthly IR that had already been utilized, around this moment in time, price had dropped lower, created a fair value gap of that market. If we have this fair value gap labeled at this moment in time, price has stung into that fair value gap at first, didn't really reject, then the next candle swept the previous week's high. Let's expand this. So this was the price action. We had a two candle rejection that pushed the market lower this last week. Market swept that high this week, didn't really displace into that fair value gap. Then the next candle opened up into that fair value gap, a consolidation candle, a sweep of the previous week's high, rejection lower, then an open, create the upper wick, and then the displacement, a clear two candle rejection, whereby if the first candle doesn't reject off a higher or off a fair value gap or an order block, then we can expect the next candle to sweep the liquidities and then drop lower. So that's what we refer to as the two candle rejection, which did happen in this example. Then the market, if we can go watch, we have displaced below this line, which is the 3 months low, also the monthly low. Yeah, so I'll need to include them so that 3 months and monthly low that has already been swept, and we need to see how price reacts onto that, then to engage. So this one has already given us, since we had seen the market displacing below, and further we could have utilized that over here. Whenever the market had disrespected this level, then we should be looking shorts of this level which had happened. So also with this current one, since we are displacing also below, I think we should be looking for prices dropping lower, and this can be a possible third candle of a fair value gap, so we can expect a consolidation or maybe a pushback. So we need to be very careful whenever we are trading it. So of a fair value gap, market created a market structure shift, created also an order block. We have weekly IR above it, which I'm not really expecting to see the weekly IR being traded into, but what I'll just have ensure is I'll just have it marked up there, but to me is really low probability to see that being traded into. Sorry. So we have top right, and this is the weekly IR right there. So having that weekly IR and also having this level here, this to me is very low probability, unless if we see market displacing towards these levels, then I will not be leaning bearish in that scenario. But for now, since we are below here, I'm not really intending to see that push higher. Observing the daily time frame, the daily has already confirmed a daily fair value gap. Over here we have from this low towards this high, and because these are volume imbalance, I would like to include that. So we have this weekly FVG. All right, volume imbalance will be by itself. So we have that this volume this weekly fair value gap overlapped with also these lows, right? If we see maybe market standing into this fair value gap, and then we see two candle rejection and displacements, then I will want to see a drop towards these lows. But if we see this area being disrespected, price closing above these 3 month and monthly low sweep, and start forming fair value gaps, maybe going higher, and disrespect this weekly fair value gap, then I will target all these liquidities resting above this. But for now, if I drop further to the 4 hour, what I can be watching for is something like this, staying into that level, and a drop going lower. So something like this is what I will expect for this week. And the good thing is Monday can go against our bias, staying into the OTE levels, and then also into these volume imbalances, as well as these weekly fair value gaps, and we might also sting into the weekly IR, right? If I have it close there, But if we disrespect this area, then I will wait for those levels again to be respected with fair value gaps displacing below. But for DXY, this is what I'm thinking. I'm expecting prices to react off that level, the weekly fair value gap, and then tank lower. So let me have this visible. All then off the daily. Yeah, so nice one. So I want to see price pushing towards those levels and then displacement below. But if that doesn't actually happen, then I'm not really bearish. But since we have bearish fair value gaps, that's what I want to actually expect. So the opposite is true for either GU or EU. So let's also do a really quick one for EU. So EU, what we're seeing is we have all these liquidity sweep from the monthly 3 months time frame. Market pushed higher. We had created order blocks. Then the market dropped as of this month. Then the last candle, we swept this previous candle's low. We pushed higher, and if we are indeed bullish or bearish, then the first target we can expect is those high. But what we're seeing currently, we have already swept the prior candles high. So we have swept the prior candles high, which we can also use to our advantage. If we see a candle closing above that high, we will be looking for continuations going higher. If we see any candles lower time frame candles closing above that high, and because already the liquidities have already been swept, then we can expect maybe the market to rally towards these liquidities resting above that. So this can be a target if we are bullish I mean target. So refining further to the monthly time frame, what we have of the monthly time frame is price swept those liquidities, pushed higher. This prior month we closed above the week's high with displacement, which possibly could signal a sign of bullish prices, because we did close above that, and this is the target. We have already swept the previous month's high. Currently we are seeing a rejection. We want to identify to what levels are we likely maybe expecting these to rally to, and then need to identify. We have these monthly IR week we have that monthly IR immediate rebalance, to which we can maybe expect a retracement to, of which we can watch if we can expand going higher, or we can expect a reversal that later on we could see if the market will rally to the previous month's low. So that's what I'm seeing from the monthly time frame. Not really clear. We have swept the monthly high as well as the 3-month high. We are rejecting lower. We have a context area, which is the previous month IR, and is it likely we might sting into it and continue higher, or is it likely that the market will continue higher without stinging into that? So of the weekly, what I'm seeing is we have this weekly fair value gap that was later on traded into, which can be a sign of not really expecting the market trading into that monthly IR, because price has already rejected. We have already tapped into that. If I can align it accurately, all right, you can see the market has already sprung into that weekly fair value gap. We swept all those liquidities and also this prior months, prior week's low, and then the market expanded higher. So if you also want to see how price reacted to this low, I need to mark up it there so that we can monitor how price will react to it, or how price did react to it this previous week's low that has already been swept right there of the fair value gap. So what I will expect is, I don't want to see any candle closing below this candle, this previous week's low liquidities that has been swept, because the market has already done its job with that low. The market hasn't really run it, but if we see a run of that candle or those liquidities with displacement with fair value gap, then we can expect maybe try to see lower prices. But as of now, because we swept those liquidities and we rejected all this weekly fair value gap, it's an indication that in we can expect maybe continuation going higher, but that's not clear. We need more confirmation. So around that previous week's low sweep, we need to see what happened. On Friday, we rallied lower, we swept those liquidities, we stung into that fair value gap, we rejected shallowly. So we need to have more confirmations. So what might also happen is we might sweep these candles low, right? Then we reject continuing higher. So what I don't want to see is fair value gaps below that weekly low. If we see that, then I might be on the sideline, because for DXY I'm bearish, and if I'm bearish, then I should not maybe also try to short EU or GU. I should be trying to look for buys. So what you can really see is a drop into this weekly low, a sweep of it. So I don't know whether all right, we have that there, and I'm sure I've marked it as a previous week's low. Maybe have it now on the left so that we avoid lots of markups. So that's what I will try to be watching for. If the market drops lower further, I'm only expecting a sweep of this weekly low and then a continuation going higher. If that doesn't happen, then I will be on the sideline. So what I'll do is, let me just have it at the right, then so what I'd like to see is maybe something, because we have that 4-hour fair value gap. I think we can expect a sting into it, right? Then we see something like this. Then what I want is displacement with fair value gap, and whenever we close above this line over here, which is the monthly IR, then I'm expecting a thing like this. So if that doesn't happen, this is the level. So this previous month's high is a key level for me. Also, my target will be this high right there. So that's what I will be expecting for EU. But if we see displacement with fair value gap towards these lows, or displacement with fair value gap, I think like this, if we see maybe a respect price staying into that, drop lower, then respect these previous week's low, and then displace going lower, then we'll try to find something else that we can target. But since DXY is bearish, only this is the thing I will be trying to look for. Quick one also on EU. EU looks more stronger compared to GU. If you compare the weekly candle for EU and GU, you notice that there is a big, massive difference, right? It's a bearish one, but for EU, it's a bullish one. If we want to be looking for bullish prices, then the pair that we should be trading should be EU, because EU is a stronger pair. So if we go the monthly time frame, what we're seeing is currently price is above the weekly high, though we did sweep it, and we did disrespect these IR. So to me, what I will be watching is these already a 3-month IR. Alright, let me align it. Alright. No. Alright. So it should be the top right. Bottom right is better. So we have 3-month IR, of which if we displace above it, because currently it seems we are rejecting, can be a sweep of liquidity, so we don't know. If we see lower time frame displacement above it, then we can expect a continuation going higher, because what I know, these are liquidities being engineered. So if we are indeed bullish, what we can target is we have these relative equal highs liquidities. So we have lots of liquidities resting at that point in time. So these will be my target if you're bullish, and the level that I've shown you should be at the top. So the level that I will be watching is this 3-month IR. Then if we try to refine further, is it the same as the monthly IR? So I'll just to avoid many things, I'll just have it as the monthly IR. If we see price displacing above it, then we want to get involved going higher. We also have this possible fair value gap, which if we don't really displace above it, we can consolidate to confirm this fair value gap, of which later then we can expect a continuation going higher. But since this candle has 25 days before it closes, to me there is a likelihood that we might see price for now rallying higher, maybe a sweep, then later on confirm the fair value gap, which can be traded into later. That hasn't really happened, so we want to react with what we have currently, and that is clear of the weekly time frame. The weekly time frame compared to GU, if we have I guess if you compare GU to EU is more clear going higher. We did have the 2 candle rejection that we were talking of, whereby this candle dropped into this fair value gap. We have the sweep of the prior candles lows, then this candle pushed higher, and currently we did form this order block. It's a bullish order block. We have a target there with these other liquidities. We have lots of liquidities above this high, so to me I'm really expecting higher prices, but what I want to see is displacement above this monthly IR to engage. And we have these weekly IR, which is resting deep below here, is it likely that we might see price deliver to that low, that IR? So we have the weekly IR. So we will be determining that of the lower time frames. Could we react off this level, we continue higher, or is it likely that we expect price to deliver to that weekly IR? To me, it's not likely we expect that, because if you watch on how the daily is printing, is we have this bullish fair value area that has already been confirmed. If we see a deep retracement into this weekly IR, then somehow you can expect the fair value area lows to be taken. So since I'm not really expecting that, do we have a fair value gap? We didn't really form a fair value gap. What I can expect is maybe a sting into this weekly, the monthly IR, or maybe this candle this week we consolidate. So there's a possibility of a consolidation this week. Then maybe the next candle confirm a fair value gap, of which we can react going higher. But if we drop further to the 4-hour time frame and we see price disrespecting this area, forming bullish fair value gaps, so since from the daily we don't have any bullish fair value gap and the weekly low is too deep, with what I can expect myself is maybe watch how price will react to the previous day's low. So I'll have this major liquidity pool in form of previous day's low, the Friday low, because price sometimes uses liquidity as a reversal point. So we have the PDL liquidities resting there, so we might see a sweep of that because we have no any other fair value gap. And since I know from the DXY we might be pushing higher into maybe the weekly fair value gap that we have seen, so what I can maybe expect for EU is maybe a drop towards the previous day's low. Then if we displace above this monthly IR and wait for fair value gaps to be formed, then something like this, a retracement will be engaged, expecting price to push towards that high and further even more to these other major liquidity pools above these levels. So if I add, we have all these liquidities, so this high could be maybe the next target. So something like that, finally towards those highs. So for me to engage in bullish prices, I'm expecting displacement with fair value gap around this moment in time. So that is it for gold, DXY, EU, and GBP. So for DXY, for gold, this is what I'm expecting, maybe deliver towards that level and then a drop going lower. So something like this for gold, and DXY I'm expecting lower prices, which means that EU and GU I'm expecting a bullish prices. So we can call it off there, but before then let's get to see what are the news events that we have this coming week. All right, so we need to go to Google Chrome, and then type in the economic calendar. So Monday will be on So Monday we don't have any news event. On Tuesday also no USD news events. On Wednesday we have FMC 2 p.m. Also on Thursday CPI. So we need to be very careful also this week. And then Friday PPI. But the good thing is we only trade as of 9 a.m. So by the time we're gonna be looking onto the charts, these news events are or have already printed out. But also we need to observe how the structure has been so that we get to react whenever the time has come for us to be trading. So I think it's a week we are expecting lots of volatility, but also it's tradable day, maybe as of Tuesday, maybe Monday, no news event can consolidate a lot, and also Tuesday, then we can wait until the FMC have passed, then Thursday and Friday after the CPI and the PPI we can engage. So that's what we have for the week, and that's the analysis. So we can call it an end at this point. If you have any query, feel free to reach out and join my telegram at ranks and mxm. So till next time guys, be safe.